Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. Alright everyone, here we are after market close on Friday, September 3rd, and today we're going to take a look at VUZI. This ticker was requested by somebody in a different video who commented and asked me if I would take a look at it. If you have a ticker that you'd like me to take a look at, feel free to drop the ticker symbol in the comments below. Please just put the ticker symbol, not the name of the company. Also, if I reply to your comment and say I put it on the list, then you can be confident that I've seen it and it's on the list. If I don't reply, just drop that comment again in the same video or in a future video to just sort of make it hit the top of the queue, and I will see it eventually. So VUZI, actually, I've been meaning to cover this for a few days now, and I just haven't had time, but it's sort of interesting that today I'm coming around because it's actually hitting an interesting nexus point and could be showing signs of a trend reversal. I don't know for sure, but we'll talk about the signs that could be there as I see them. So you see here, VUZI, this is on the daily chart. It essentially had this big run up to 32.43 that started around $4 or less, and now has come down all the way to the mid 12s, bottoming out to around 11.30, 11.25, somewhere around there. Now, the interesting things, let me take the MAs off the chart for the moment so that we can just get a better look at a couple of things. One thing is potentially a channel that we have here. So we put this channel in. You can see it's been following this down channel for quite some time. So there's this one, or another way to sort of turn this would be to pop it out over here and basically say that this is just about now hitting the upper bound of the channel, which, in this instance and in this instance forced it down. And obviously it briefly left the channel here for what's that, probably a couple of trading weeks, but then quickly got back in and it's been following it down ever since. So since it came back in, it's at the beginning of June, it's followed it down for all of June, all of July, and all of August. The thing that's interesting to me about why it could potentially break this down channel right now is it's at a pretty key support and resistance zone. So if we look back here, when it had this first initial run up from the high 3s to a little over 10, so it about tripled its price over those days, or nearly tripled its price, and then it topped out and it pulled back a little bit, consolidated, and then made another run, pulled back, much more briefly consolidated, made another run. So the run that kicked off this bigger run topped out initially right here, right? This was the topping out that caused the first pullback around 1089. Now we look here, that's about where it caught support. Now 1129 is the zone, so it's within what, 40 cents, which in the vast scheme of things over the course of pretty large swings in price is a pretty solid hit in terms of a price zone. So to me, this could be a really good opportunity for it to have just bottomed out, consolidated it, tested it twice essentially, right? You see these two tests right here, and now it's trying to build off of that and trying to simultaneously push itself out of the channel. Now it's going to hit some friction probably here because you see resistance that had previously been supports and previously been support and previously been support, and was resistance here, was resistance that flipped to support here and held, right? And that was the retest. And then that was another retest. And then that was another test. And this test failed. So pretty strong zone, we'll say, at 1349. So I guess the point here is it's going to hit some strong resistance there, but if it's able to flip that to support at 1349, that should allow it to at least get out of this down channel, even if it just sort of moves sideways along and gets some distance from it. The thing that's always the dangerous point is if it comes out of the down channel and then just comes back and starts following it down again. Even if it's slightly outside of the channel, it just follows this upper bound of the channel down, 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 and it doesn't do you really much good, but any difference than if it were just in the channel anyway. So I would be looking for it to flip resistance to support at that 1349 level. Then the next level that I would be looking for it to run toward would be this 15.5 level. I don't know why I said it like that. This 1551 level, because you see a bunch of resistance here that had previously been support here. Right? So this should be a pretty strong supply and demand zone. This was even resistance back here that then flipped to support here. And yeah, so that would be what I'd be looking for just in the very near future. Support at 1349, getting itself out of this channel, and then at some point making a run at 1551. If it can't hold, or if it can't get support at 1349 and it stays in this channel, I would be looking for its next opportunity to catch support and at least move sideways out of the channel right at this 1089 zone. And if it can't, and folks are interested, I'd be happy to come back and take another look at what lies below that. By the same token, if it comes up and starts pushing against 1551 here in a few weeks or what have you, then I'd be happy to come back again if folks are interested and take a look at what the next sort of price targets up could be. And all of these supply and demand zones are price targets in some way, shape, or form if you want to use them that way. It could be a profit taking zone, it could be a stop loss, it could be a place to trim and lock in some profit, whatever it is. Another opportunity is using it as a buy into price strength, meaning I wouldn't be surprised if there's folks who are looking at similarly this 1349 zone and wanting it to get support. So if it comes up and makes a run toward 1551, the most healthy way for it to develop support at this 1349 is to come down and test it again. And so there could be a lot of folks that are looking for it to come through that 1349 and make its first drawdown to retest 1349. And if it shows strength there, then going ahead and buying in and feeling confident that it's going to sort of unleash an uptrend at that point. So just some things that I would be watching for in the meantime. Now, if we throw these MAs and the MACD back on the board, okay, it gets a little tough to see, but let's zoom in and sort of unpack it. So the other sort of positive sign, you see, ever since this has been in the channel, it's really only had support over the 20 MA here, meaning it had it here, but it had it as it had already come into the channel. So the first time it had been in this down channel and got support from the 20 MA in the channel was here, and it just consolidated along it and then fell down through it. So I would just watch. It's obviously consolidating along it again here. So just make sure that history is not going to repeat itself and it's going to fall back through again and just continue down the channel, which could definitely happen. The other opportunity there, the bullish scenario, is now it has support over the 20 MA. The 20 MA will provide additional support and help carry it up and out of this channel. Now the MACD is also doing a good job rising with this. And we do see, let me see if this is the case, 1285, 1260. Okay, so those are lower lows, and 5147. Okay, so you also have a bullish divergence here with these two red candlesticks. Meaning, what that means on the MACD, and this isn't a guaranteed thing, but these are bullish indications. It doesn't mean that it has to or is going to go bullish, but they're signs. This candlestick here on this daily chart, the low is 1285. The next day, which was yesterday, the low is 1260. So it was a lower low than the day before. Now what we saw at the same time was down here on the MACD, we saw the MACD move from minus 0.51 to minus 0.47, which is moving up. It's increasing because it's below the baseline. It's a negative number. So that is a bullish divergence. The price is making lower lows while the MACD is rising to higher highs. So that could be a good sign that there is some just bullish momentum that's built up at this point and is going to be able to create a bit of additional bullish energy and support here. So those are the support signs as I see it. Bullish divergence on the MACD bullish crossover sitting below the baseline, 20 MA there as support at the moment, but certainly it's caught in a longer term bearish trend at the moment, and so you are fighting the trend, that's for sure, right? And that can often be a losing battle. So that's kind of where the battle lines lie as far as I can see it with this one. Now, quickly looking at the data, a couple of things. One, analysts, 2 buys, 1 hold, and the return potential at this point is well over 100% because they have a price target of $27.50. I assume that's the consensus price target here on Ortex. There's probably some varying ones. If you look at tip ranks, maybe you can get a clearer indication of exactly what the analysts are saying. Now, the other side of things is this short interest. So shorts right now are nearly 20% of the free float. And so that's putting a lot of short pressure on the stock. So the degree to which this could squeeze, if it does get a good bull run going, that could certainly come into play. I wouldn't say it's there yet because it's peeling back, but the things that you want to look for is this cost to borrow should get much, much higher if there's actually going to be potential for a squeeze. This is a high enough short interest to potentially effectuate a squeeze, but we want this utilization to creep higher toward 100 as well. So sort of the double-edged sword is a squeeze would be great. I think the better scenario is if the shorts just kind of slowly and quietly start to close out their positions and let the stock more organically breathe and do its thing and let it come back that way. Effectuating a short squeeze, there's going to potentially be a lot more pain to endure before that could even happen. It may take additional weeks. So additional weeks of really strong selling pressure probably isn't going to be stomached very well for folks who've already endured, a pretty drastic deceleration in the stock price over the course of several weeks and months. But that's my look at VUZI, and yeah, good luck if you're in this one. I hope that you had a good trading week and that you have a great weekend ahead. I certainly appreciate you watching, and I will see you in the next video.